What's going on YouTube? Welcome to the channel. I'm your host, Big Ben. And today in the market, we have a pretty good pullback going on. Don't know how far the market's going to pull back. Let me actually take a look at the SPY. Okay. So now this is a good and a bad thing as far as the market pulling back. So if you can see here on my 20 EMA, which is the yellow line here, the market has pulled back and so far it's holding, and we have investors or companies coming in and buying it up. Okay. So my only worry here is that we possibly can pull back down to the 36.11 area, or if we hold here, we'll maybe consolidate just a little bit before we continue up with our bull run, or we can go ahead and consolidate here a little bit more and pull back another leg or two. So what I'm looking for here in this position is that right now it's 1:36 Central. So it has about maybe an hour, 24 minutes before the market closes. Usually in this situation, a couple things will happen. Either the market will go up or the market will go down. So usually around 2:30 to 2:45-ish time frame, we'll have our decision. I'll be surprised if the market closed quietly, consolidated, staying at this pullback range. But more than likely, if we have a flush, then it'll probably give us a snapshot of what the rest of the week will be like. So there may not be a strong continuation to the upside, but I'm just looking for continuation, I'm just looking for consolidation sideways, maybe a small minor pullback, but then eventually maybe into the end of this week or next week, we'll start making our way up to have a retest of 37.69. Okay. But with trading comes risk. Okay. As we all know, get into the trading world. And what I am planning to do is go here, put on Amazon. All right. So I'm looking at Amazon. Amazon, as you can see from my 100 EMA, and you can see from the chart itself, it has a strong bullish run continuation going. So what I'm going to do is take a chance with Amazon, and I may actually, what to do. This is one of the decisions of if I take a trade, I'll take a trade right here at the 3,100 even strike price. Okay. Now, the EMA line is around, let's call it 31.18. All right. So what I want to do is go a little bit below and set at 3,100 just in case this flushes down. If this flushes down, it'll do just like it's done here at the 50 EMA. It'll flush down, it'll hit, and investors will start coming in and buying it back up. So if this happens tomorrow or lead to the end of this week, then we'll hit and we'll pull down some and it will come back up. But if we exceed this 100 EMA, then more than likely we're probably heading down to the 200. And yeah, that's one of the days in the market to where we can have a repeat of March, possibly. I don't think it'll happen, but I don't know. No one knows what happens in the market. But here's the activity for March. Okay, we had a minor pullback here, then the gap down, pullback, little consolidation, the gap down again, and then another gap down, and then we had a recovery start. We had a mini fake out bull run, pullback again. We thought we was going to go into a bearish type of market, but then the market turned around and Amazon gapped up, consolidated, and then started gapping up back on this bullish run. Okay. So what I'm going to do, usually if I get into the trade, it's around about 2:30 to 2:45, so I can actually see what the market is doing. But actually, let me show you my portfolio, my trading portfolio now, how my trades are looking. So this is pretty much this Christmas tree type movement to where it's a lot more reds than greens. You know, it wasn't like this a couple weeks ago, but this is trading. Okay. in my opinion, the best way to insert yourself into the market is to be a buy and hold trader slash investor. Because that way, if you got a good company or you buy into a good company, all you do is set it and forget it. Okay. So Apple, you hold it for 3 to 5 years. There's a possibility that Apple could be around $200 within 5 years. So I'm thinking it will. So that's the best best way, in my opinion, to trade the market if you are a buy and hold trader. Okay. If you're like myself, to where, I buy stock, buy leaps, buy calls, buy puts, credit spreads, put spreads. Credit spreads is a put spread, but sell puts, naked puts. I do everything. This is what your portfolio can look like. Okay. This is the life of a trader, which I'm a part-time trader, but this is the life of a trader, and you have to manage your positions. Now, on a day like this, I took off a couple trades right here. As you can see, this is a new year to date. All this is restarted. And since the morning started, I took off $447 in profit. Okay. So, it's, slow to the week, but hey, not complaining so far. What you want to do in a situation is hold your positions. Okay. Hold your positions. Now, the thing that'll be against you with contracts is time, depending on how you set up your trade. Okay. Like AMD, this right here reads January the 8th, which is this week, Friday, this week, 2021. Okay. So I have $114 in this trade, a profit I could take now, and I have 2 puts on. Okay. Each value at $1.88 a piece. So about $367. You get what I'm saying? Okay. Now, in this situation, what I could do and what I usually do is I will roll my trade down to a strike price, down to the 89.50, with my strike price being here at the 90s put. Okay. So I will roll this until next week, receiving a credit of $1.25 per contract. Okay. So this will bag me an extra $250 in my pocket. And we'll go ahead and we can wait for the price to rise next week. Okay. So as you can see, let me actually go ahead and put this by strategy. Okay. All right. So as you can see from my strategies, I have on cover calls, credit spreads, long call, long stop, naked puts. And that should be it. Okay. So going down the list real quickly, I have a cover call in Fubo and Tesla. All right. So for Tesla, I have 200 shares, and I sold calls that expire at the 850 strike price this week. Okay. I went all the way out the money because I don't want the market to take away my shares if Tesla was a blast past $850. Okay. So we just go ahead and we'll let that. Let's see. What's the profit on it? Okay. So for the call from Cross, you look at the gain loss percentage. This is today's gain loss percentage. You don't have to worry about this. But pretty much for the life of it, which I put it on a day, I could take it off right now for like $86.60. But I'm leave it on. I don't think Tesla will make it to 800 this week. It could. Anything's possible with Tesla. Okay. So Fubo, these shares I put on last week, my purchase price was $28.99, but we're down to $28.37. So I went ahead and I sold a 31 call against it, receiving $1.05. And so right now we have a profit of almost 50% profit on it. Okay. 51.30. Now my credit spreads, I'm down in just about every spread that I have on. I have a credit spread on in Etsy, FedEx, Google, Moderna, the Trade Desk, and Workhorse. Okay, so I'm thinking Workhorse will recover, but for these credit spreads, yeah, usually when I put on credit spreads, for me, it is what it is. I make the money or I don't. I have time on just about every one of them. June 15th, June 15th, January 15th, January 15th, January 22nd, 15th, January 29th, January 15th. So even if this week is a down week, it gets a little worse than what it is. I'll keep these on, and like I said, we have till next Friday to make a profit or not. All right. And my long calls, the only one I'm in the money with or have money on right now is NEO, which I have $868.63. Fastly, I actually had $500 in this one. But yeah, I kind of kept it on, got a little bit greedy, wanted to run some more, but it happens, man. No biggie. But this actually is an earnings play. So we actually have about a month and maybe a week or two to see if we can turn this around or at least break even on it. Okay. So we have DraftKings, AMD, Pinterest, Palantir, Space, and Workhorse. So as you can see from a couple of these, they are leaps. So for instance, DraftKings, this expires next year, January 21st, 2022. This is 21. NEO expires January 21st, 2022. Pens, the same, expires January 2022. Palantir, Space, and Workhorse expires in about another 3 months. Okay. This is the Planet stock that I have about 500 shares of. Yeah. And naked puts, as you can see, my main strategy I focus on is naked puts. AMD, what I showed you earlier, had profit in it. Had profit in NEO, about $500 down. And Datadog, about $1,000 beyond. So these actually came up quite a bit. Okay. So this total, I think, was down maybe like $7,000 or $8,000, which is very, very important to position yourself to where if the market does pull back, until you get to that red area for me is if we cross the 100. And if we cross the 100, we got to come down to 3,000 if I put on a trade here for me to actually consider getting out of trade or just closing it for a loss. But if I put on a put credit spread for the end of this week or for next week, then if it runs its course and it loses its value, then it does just that. So that's how I am with credit spreads. I don't let all of them expire if it's 100% loss, or even if I have money on them, I don't let it go to 100%. Say for instance, so if I got 500, so for example, if I have $1,000 in a trade and Amazon runs, if I have $1,000 Amazon trade on and Amazon here and it runs and the trade has about $400 or $500 of profit in it, I'll take it off. Just because credit spreads are unpredictable and they're, in my opinion, not as good as puts for defending and moving down to the strike price of the stock. So as you can see, I think I'll go ahead and I'll wait for probably that 245 hour to see if I go ahead and move down because the market's still moving down. I generally use either the SPY, the NASDAQ, mainly the SPY though. This is the ETF. So you can use the ETF, the futures ticker. I know this is all advanced stuff, and I mean, you guys don't have to worry about stuff like this to kind of get a snapshot of where the market may or may not go. But this is the highest, 37.73. Usually when we hit a high in a breakout, there is a nice little pullback in the market. So I wouldn't be surprised if we pull back here to the 36.09. Okay. Anything below that, maybe like the, about 3,500 would be an extreme pullback, but, it's no problem. I'll hold my positions and I'll roll them. And actually, let me go ahead and I think I'll do a live trade. So NEO, we have 66% of the profit that, we have 66% of the profit available for us to take out of the trade. If you times this by 5, it's like $150 a piece. So was that $750? So about $500 has 200. What is that? Oh man, my math. So $750. So we're about $250 off from the full profit. And this does expire. It expires this week. No, excuse me, it expires next week, January 15th. So either I will buy this back and roll it down one, or I will roll this until the week after the 15th, which is the 22nd. Okay. So I'll make that decision in about an hour or so, depending on what else the market gives us. And as you can see, intraday buying power, margin buying power, non-margin buying power, all this is real cash, man. Yeah. So, yeah, man, I just wanted to give you guys an update on a pullback in the market, man. Just have a level head, man. Don't allow the market to shake you out. So this is one of the biggest reasons why 95% of traders lose money, because when the market hit the fan, then everybody's selling out of their position, whether they're investing or they're trading and stuff. So it takes a while to actually work on your emotions. I mean, with these positions, I don't want it to happen, but I can lose up to $10,000 or $15,000 and be fine with it. You know what I'm saying? Because even if the market falls down, I mean, guess what? Whether it's continues to fall this month or it falls for a couple of weeks, it will recover. And usually the recoveries are more powerful than, the losses, because, if it's a bear market, the market falls faster than the bull market. Okay. So other than that, hope you guys like, subscribe, and go ahead and do your due diligence in the market, and let's get this money. Have a good day.